This is the fourth kind of discussion presentation in our series here this afternoon. If you're in the US, late afternoon, I guess. You go by Johnny?
I go by Johnny or Jonathan.
Okay.
Depends on whether you're one of my Twitter friends or not. That's kind of how it goes.
Already have the beard compliments coming through. So
yeah, thanks, Stephen. Yeah. It's funny, I had to change basically all of my authentication on all of my devices because they didn't recognize me after like 2 months of COVID. Yeah, most people are used to a fairly tame beard, but this is getting a little bit burly.
Yeah. So Johnny's with a very interesting company in the space. For those who aren't familiar, Chainalysis really focuses on transparency, understanding what's happening with all these transactions that are frankly happening in this new digital ecosystem that the world really hasn't had to deal with before, and understanding the data behind that, understanding what's happening with the transactions behind it, helping folks think about issues like compliance and the underlying activity within these blockchains. I liked the tagline on the Chainalysis website, which is "We create transparency for a global economy built on blockchains," and that is, I think, where everyone or most people in this conference feel and see kind of the future of where this is headed. And Chainalysis has carved out a pretty important niche by not only understanding that activity better than most, I would say, in the industry, but also being a great facilitator of discussions to their clients, which could be, banks, businesses, governments, people who have a vested interest or need in understanding what kind of activity is happening, as we've seen. So I'm going to turn it to you. The floor is yours. I think until roughly 7:30, maybe a few minutes past, if the Masari guys don't step in. But Johnny, you can take it away, and everyone enjoy.
Thanks, Matt. Yeah, so I think that we have been in the business 5 years, and I just wanted to take a chance to speak at a conference and talk about really sort of what we've seen change over the last 5 years and where we stand as a business today. So when we started at Chainalysis, we looked at the industry, and I think you heard on the last panel, Bobby was saying how it was impossible to get bank accounts even if you had 20 million in venture funding, and there really wasn't the type of connectivity that there's starting to be between sort of traditional finance and cryptocurrencies. And I think that the key things that have changed is that the world that we live in today recognizes that there's an inevitable shift towards cryptocurrencies. There's more liquidity, there's more investors, there's a need in the current sort of political and economic climate to have an alternative that exists beyond our domestic currency, and really that means that there needs to be a way to understand how and why people are using cryptocurrency. There needs to be sort of business cases made for these global financial institutions to get involved in the space, and there needs to be tools at the disposal to ensure that any of the illicit activity is not present, and that the market can function in the way that it's used to in traditional finance. And so what I wanted to sort of touch on is how we're seeing this at Chainalysis unfold in our different verticals. So at the beginning of Chainalysis, we really started off as the official investigators into the Mt. Gox bankruptcy case. For those people that were around in cryptocurrencies at the time, everyone was saying how transparent and open the blockchain was, and how that meant that you could then follow the money. The reality when Mt. Gox went bankrupt was that everyone was scrambling on Reddit, and people were sort of looking at the blockchain but not really figuring out how they could organize that data. What Michael, myself, and Jan did was we built a tool called Chainalysis Reactor that allows you to really visualize the flows of funds across the blockchain and determine what are what are the types of wallets involved in making those transactions? And that is critical if you want to understand, where money goes, what services are involved, what are the purposes behind these transactions. And since 2014, we've really managed to build our business around providing that intelligence to the most important stakeholders in the industry. So if you think about who first needed to know about this, it was the people in the Mt. Gox bankruptcy case, but then it becomes the government agencies that are involved in making sure that there's remediation and making sure that there's a court and a fair trial and all of that. And we really built out our initial business in making sure that law enforcement and the government would be able to actually look at the industry and say, how much of this is bad activity, and of the bad activity, how much can we actually, prevent or actually mitigate. And that's where we sort of built the initial business. And the types of cases that have been built over the years are the proof points in which you could say that this industry takes money laundering more seriously than many other emerging industries, and has managed to really help governments around the world build regulatory regimes that allow people to build companies, to allow people to trade, to allow people to unlock new business opportunities that probably none of us were really thinking about 5 years ago. And that's been a journey of us continually educating regulators and continuing to really be the way in which they see blockchain data. And that's been an evolving space. We've now opened offices in Japan. We've opened office in Singapore, and we're in London and the US, covering the whole globe and making sure that in over 40 different countries that we're able to educate the market and build the tools in which we can get away from cryptocurrencies only used for illicit activity. And when we talk about transparency, we don't just talk about the value of it, or it as a hypothetical value for the technology. We talk about it in concrete terms. So we put out a lot of research on what actually is Bitcoin used for? How is the trading behavior changing over time? What does the holders of Bitcoin, what does the composition look like today? And we do all of this in order so that people can understand what is actually driving the market. And that's where we are spending more and more of our time is, how does the activity that is happening on chain that everyone sort of thinks about and is different about this ecosystem, how does that justify the investment and the the risk that these businesses need to take in order to enter into a new industry? And what we've seen is the cryptocurrency businesses themselves have adopted our technology to manage their money laundering risks. So we have a product called Chainalysis KYT that allows them to automatically score transactions in real time and automate a lot of their compliance processes, so that when financial institutions and regulators look into the industry now, you see something that's much more mature than even some of the other emerging fintech businesses. There's been, if you look across the board, there's been a lot of concern in regulators and in financial institutions about how do you still be compliant in the world of fintech? What we've seen and what we've tried to prove from day one at Chainalysis is that you have unprecedented opportunities to mitigate the risks of money laundering in cryptocurrencies. We've managed to build some of the best, most successful cases, taking down child abuse material sites, and really shown that law enforcement can build these types of cases so that the industry as a whole can continue to do business and continue to provide services for good customers and people who need access to this technology. I think then what we've seen in our work with banks, and Bobby sort of spoke about it a little bit with our work with Barclays early on in the industry to try and really open that up so that there would be banking services available to all types of cryptocurrency companies. We've really made an effort to continue the same type of education journey that we took the governments on over the last 5 years. Is you first need to understand what is this, and how it already is part of your business today. So a lot of banks seem to think that there's no nexus between the bank and cryptocurrency businesses, and that's not the case. And there really are good customers who are doing business with the bank that would love the bank to provide more services to that customer set. And I think what we've seen is that banks today, you're seeing, you saw JP Morgan get into the space. You're seeing plenty of retail interest from customers, particularly in developed markets, and that is driving banks to need to figure out how do you put some compliance processes in place. How do you change the risk attitude that they may have had in 2014 or 2017? How do they adapt it into something that's suitable for the industry? And what we've seen is that there's just a great increase in the maturity. You've got now senior banking officials go and work at cryptocurrency businesses and be able to explain in their language what it means to manage risk in cryptocurrencies, and that's really led to a much better interaction between cryptocurrency businesses and banks. And what I'm seeing is that the banks that were early into this market, they're now needing to innovate further. They're now needing to look at the cryptocurrency businesses and look at how should they actually offer direct custody, or how should they be able to offer trading or derivatives or something to their customers in order to stay sort of the banks that are at the bleeding edge of this industry. So I'm seeing that as a trend. I'm also seeing some of the more traditional banks really accelerate their digital banking roadmap. I mean, if you think about what's happened since the beginning of this pandemic, people have definitely shifted away from some of their traditional payment habits and their traditional financial habits that have typically been really hard to break over time. And so they're looking at maybe people won't go back into branches, maybe people won't transact in cash as much, and what are the types of investment products that they need to offer to retail in order to retain them as customers. We've seen sort of Square and Robinhood and Revolut and other sort of fintechs really come into this environment, and we're seeing some of the bigger banks take a look at that, take a look at what was a very long digital banking, digital services roadmap, and start to think about how they really accelerate and put the foot on the gas in order to be able to be competitive with those companies. I think that one other thing that we're sort of seeing is that particularly in markets where, say, for example, remittances, where there are lots of habits that get created. You've got people transacting with a lot of their net worth in every transaction. That whole market has really taken a hit during this crisis, and we're looking, and businesses are looking at the opportunities that come out of that, where people are looking for a cheaper alternative, are looking for something that's natively digital, that's looking for a better experience. And that's something that I think the industry is well positioned to take advantage of as things get back to normal and people not back to normal, but maybe the new normal. So that's where I think we're definitely spending a lot of time is looking is looking at how those financial institutions can accelerate their adoption within the industry, and how can they manage that risk. And so we launched a product this year called Chainalysis Cryptos, which is really about how people should look at evaluating counterparties in cryptocurrency. And that's really about, how do you look at what is their activity happening on chain, looking at what transactions they're associated with, to see, is that a counterparty that is a good counterparty for you to be able to do business with. And this is an early product that we've got, with some financial institutions who are really looking at benchmarking, for example, different businesses, and making sure that they can get comfortable with the type of compliance that those businesses are doing. And I think that there's a real push to be able to just receive that information on cryptocurrency counterparties for financial institutions to get even more comfortable. I'm going to keep this those are just sort of my big takes. I think that financial institutions in general are looking at fintech and digitalization very seriously, particularly in the current crisis. And I think that's very good for the cryptocurrency space. I think also Libra and the way that they're getting towards launch prompts some really good questions about what does the future of the industry fully look like. And what we've been spending a lot of the past 2 years on at Chainalysis is building infrastructure to be able to support multiple currencies, and really develop the tools and frameworks in place to be able to support a wide range of use cases. And it's really exciting when something like Libra comes along, where you've got the more sort of traditional cryptocurrencies, if you will, on the one hand, and you've got innovations like Libra on the other, which are really aimed at, many of the businesses are looking at the same mission, but from different approaches. And being able to be the data company that sits in the middle, that allows these new businesses and new business models to look at the history of crypto, and how it's actually managed to manage the risks and gain adoption and favor in the eyes of regulators. That is an important task that we bring to the table when central banks or new businesses are looking at launching into cryptocurrencies. And as financial institutions are also sort of taking a look at that, we help educate and train those people to be able to put in place the right processes in order to be able to offer services in this industry. So that's where we're spending a lot of time in these strange and bizarre times. And I'm going to keep this fairly conversational if people have some questions. And I'm going to take the first one here. How much of Chainalysis work? Sorry, I don't have COVID, just so you know. How much of Chainalysis's work is focused on mitigating illicit activity and KYC compliance compared to understanding and gaining insights into on-chain transactions for building new businesses? I think that fundamentally the mission of the company is about empowering people to be able to develop businesses that couldn't be made possible before the invention of cryptocurrencies. And I think about that as the key reason why I got into the space. As a business today, we need to understand all of the activity that happens on chain. So in order to be able to mitigate risk appropriately, you need to be able to identify not just the illicit activity and be able to determine what is darknet markets, where are there sanctions violations, where are there other types of money laundering or scams or ransomware or any type of cybercrime. You need to be an expert in that, but you also need to be able to identify all of the actual legitimate activity, because when you're trying to indicate to someone a riskiness of a transaction, it's not good enough to just be able to identify one side or the other. And so in terms of where we spend our time, 99% of the activity that happens in crypto is not tied to illicit activity that you can identify on chain. Most of that is tied to exchange flows. I mean, many of the people in the previous panel, they move millions of dollars in cryptocurrencies on a daily basis. That is the majority of the activity that happens on chain. So we definitely invest in identifying all of it, and I think that by working with hundreds of the top exchanges in the world, we're able to take a really unique view on the legitimate activity that's going on in cryptocurrency that helps everyone sort of manage their risk portfolio properly, and also helps you better identify where illicit activity is being cashed out. So in terms of our actual business and what it relies on, it's quite hard to say it's hard to say exactly what the balance is, because I think that the exchanges that are our customers, they use us not just to comply with regulation, but they use us actually to build these new businesses. So in terms of our customer set, our customers are using us for their KYC and AML compliance, and we are currently exploring with some of those customers what would it mean to leverage some of this on-chain data to open new businesses, but that's not direct revenue that we get from any of our customers today. There's a conversation about this question: how does Chainalysis plan to continue to enable compliance when privacy-preserving technologies like ZK Snarks are implemented? Does that make monitoring on-chain activity more challenging? Yeah, so ZK Snarks, for those people that aren't familiar, are zero-knowledge proofs that essentially allow you to put less information in the public blockchain for everyone to see. So you might be able to obfuscate, for example, the address from where a transaction came from, or you might be able to get rid of the information about the amount of a transaction. So that's that definitely makes the type of analysis more difficult. What it does, though, is it makes the burden of coming up with the policies and procedures about how a business deals with that, it puts it more squarely on the businesses themselves. And so the companies, the exchanges that build these compliance programs, they need to essentially be able to identify the risk and build a compliance program around how risky are certain transactions and certain customers. ZK Snarks might be something that they consider more risky. It might not be. It depends on sort of their risk preferences. We do a lot of research into what is still possible in those environments, and we look to be able to support those types of investigations and compliance efforts in due course. I know that there might be some more questions or polls or people to. Yeah.
If there's any more questions, feel free to put them in the chat. We have about like 5 more minutes, and then we can call it a day. And then there's going to be we'll give everyone a small break before the next main stage starts at 8. So any more questions, please throw them in. I do have one more question while other people might be typing. Or it looks like Christian has a question. What's the most surprising Chainalysis insight that you've come across recently?
I think that there's a few interesting ones. I think that in the run up to the halving, we could see very much sort of the activity of the miners hoarding coins just before the halving, and we've also seen like the transition of different amounts of trading activity going in and out of exchanges over this period where we've had severe economic volatility, and you're able to really see sort of how much of that flow is institutional or professional traders, and how much of that is actually retail based, and seeing sort of price movements correlated to whether you've got sort of professional investors or retail investors has been fascinating. The other thing that's been also interesting is on the geo side, we used to see a lot more flows between different regions of the world, so exchanges that predominantly serve APAC or EMEA or the US. Actually, since COVID's hit, there's been like a lot more just inside its own region trading, rather than things moving across the globe. But if you are interested in the types of insights that we bring, we publish a ton of stuff to the Chainalysis blog. We publish a weekly newsletter, which goes out every Wednesday. And we also have we're doing some work with CoinScrum in the UK with our chief economist, Philip Gradwell, who would be able to share some more insights. So, yeah.
I have one follow-up to that. You mentioned that a lot of the trading has become localized in certain geographical regions. Do you think that is largely because of the events of COVID, or do you think there's something else at play?
Yeah, that's a great question. I mean, I think that I think it's largely. I think there's almost hardly anything at the moment that's not got to do with COVID. So I think that there's definitely some significant impacts of that. It's something that we're continuing to monitor. I think that we're really starting to set a baseline of understanding the microstructures of this market, and understanding who are all the participants, and how does that impact trading volume and different businesses, and that's something that we're going to continue to work on, and hopefully deliver some insights to the market.
Awesome. Thank you so much for these insights, Jonathan. They've been incredibly valuable, and I highly recommend you check out their newsletter, because it is truly the best place to catch up on what's going on with the regulatory updates and the headline risks. So thanks again, Jonathan. Really appreciate you coming on.
Thanks, Mason. Cheers.